Bitcoin, a high-scale digital commodity. When the U.S. Commodity Futures Trading Commission, CFTC, classified Bitcoin as a commodity, it not only legitimized its position in the financial market, but also redefined the rules of the game. Equating Bitcoin with assets like gold and oil symbolizes the recognition of its importance as a valuable resource in the global economic landscape. It's not just about status. It's a milestone that allows Bitcoin to transcend its stigma of digital currency of the underworld to become a central piece of the modern financial system. This classification offers the market something that has always been critically necessary: clearly regulatory. Now, large institutions can invest with confidence without fear of the legal traps that have haunted the crypto market in the past. The impact of regulation on the Bitcoin market. Being recognized as a commodity is not a mere formality. It's a revolution that opens the door to a new era of growth and maturity in the cryptocurrency market. Under the supervision of the CFTC, derivatives markets such as Bitcoin futures and options gain legitimacy, attracting large-scale institutional capital. This means more liquidity, greater stability, and a decisive step towards the massification of Bitcoin as a viable alternative to traditional financial systems. While some fear that regulation limits freedom, the Krypto Kaiser points out that it is exactly the opposite. Without rules, the market is a war zone where only sharks survive. With regulation, even the smallest fish have a chance. The legal infrastructure also paves the way for more sophisticated financial products, such as ETFs, to democratize access to Bitcoin for ordinary investors. Digital gold with unlimited potential. What differentiates Bitcoin from traditional commodities is not just its digital nature, but its programmed scarcity. While gold and oil depend on withdrawal processes that can vary according to demand, Bitcoin has a limited supply of 21 million units, with no possibility of increase. This creates a deflationary asset that, in times of economic uncertainty, becomes increasingly attractive as a store of value. In the world of fiat currencies, where uncontrolled printing reduces purchasing power, Bitcoin offers stability and predictability. While you trust the government to protect your money, I trust math, Kaiser teased. This rigid boundary, combined with the transparency of blockchain and the robustness of the decentralized network, solidifies Bitcoin as a revolutionary asset. The programmed efficiency of Bitcoin is not just a technical whim. It is the basis of its proposal as digital gold. Like gold, Bitcoin is hard to come by and limited in quantity, but unlike gold, it does not require physical mining or be subject to discoveries of new deposits that could flood the market. Bitcoin's algorithm ensures that only a fixed amount is released over time, making it predictable at a level no physical commodity can reach. This attracts investors seeking protection against inflation and unstable governments, positioning Bitcoin as one of the most reliable assets of the future. As Kaiser points out, no matter what happens in the global economy, nobody will be able to print Bitcoin anymore. And that's what makes it indestructible. This unique feature also makes Bitcoin a strategic tool for institutional investors. In a traditional financial market full of uncertainties and manipulations, Bitcoin emerges as a solid and innovative diversification option. Hedge funds, banks, and major players are increasingly allocating part of their portfolios to this digital commodity, recording its long-term growth potential. What started as a financial experiment is now seen as a necessary alternative to any robust investment strategy. As Kaiser states, Bitcoin is not just a store of value. He's the only asset in the world where you can be 100% sure that it will happen with the offering. And that, my friend, is pure power. Bitcoin, the revolution as a digital commodity. The classification of Bitcoin as a commodity by the Commodities Futures Trading Commission, CFTC, marks a watershed in the global financial market. By being placed alongside assets like gold and oil, Bitcoin transcends its initial status as an experimental digital currency and establishes itself as a strategic value resource. This designation is not just a seal of approval, but a step towards the normalization of Bitcoin in the traditional financial system. Regulation brings with it the additional need to attract institutional capital, eliminating the fear of legal uncertainties that drive away large investors. For Krypto Kaiser, this change is more than welcome. With clear rules, the sharks come into play, and when they do, the market gains strength. In a regulated environment, Bitcoin gains room to grow, mature, and conquer new audiences from small investors to corporate giants. Regulation as a growth engine. Contrary to the myth that it stifles innovation, CFTC's oversight of Bitcoin is seen as an occurrence for its expansion. From this classification, financial products such as futures and ETFs can be created more easily, increasing the maturity of the market. These products allow investors to expose to Bitcoin without the need to own it directly, reducing risk and making the asset more accessible. In addition, regulation helps to filter out the opportunists and frauds that harm the sector in the early years, establishing a fairer and more transparent market. As Krypto Kaiser highlights, clear rules are not the end of freedom. They are the beginning of a market where even the little ones can win. This new structure also strengthens the confidence of traditional investors who previously hesitated to participate in a market perceived as chaotic. The result? An influx of institutional capital that can transform Bitcoin from a volatile asset to a true financial anchor in the digital world. Blockchain, the Bitcoin backbone. If you think Bitcoin is just a digital currency, welcome to the beginner-level newbie. The real power of Bitcoin is in its technological backbone, blockchain. This innovation is not just a programming trick. It's a revolution that is rewriting the rules of the game in the financial world. And today, I, the Krypto Kaiser, will teach you what blockchain really means and why it is the closest thing to magic that technology has ever created. First, what is this blockchain? Imagine a giant ledger, a public record where every transaction ever made is recorded forever. Only, unlike a central bank that can manipulate the numbers, this book is distributed by thousands of computers around the world. And today, I, the Krypto Kaiser, will teach you what blockchain really means and why it is the closest thing to magic that technology has ever created. First, what is this blockchain? Imagine a giant ledger, a public record where every transaction ever made is recorded forever. Only, unlike a central bank that can manipulate the numbers, this book is distributed by thousands of computers around the world. This means that no one can change the rules or delete a line without the whole system detecting and rejecting the attempt. Each page of this book is called a block, and each block is linked to the next by a stream of encrypted data, hence the name blockchain. Isn't it amazing? While banks need safes, cameras, and security to protect their transactions, the trusted blockchain in pure mathematics is incorruptible, transparent, and virtually impossible to hack. Blockchain doesn't need intermediaries, lawyers, or trusted third parties. It's self-sufficient. If you haven't yet understood the impact of this, here's the brutal truth. It removes the power of banks, governments, and financial institutions over your money. But how does blockchain work in practice? Simple and bright at the same time. When you make a transaction, such as sending Bitcoin to someone, that operation is grouped with other transactions in one block. This block is then validated by a computer network called nodes or miners. These computers compete to solve a complex mathematical problem, known as proof of work. Who resolves first, validates the block, and adds it to the chain, and the most impressive. This creates a decentralized trust system, where security does not depend on a single entity, but on the collective strength of the network. While you're depending on the bank to tell you what's yours, blockchain gives you full control over your assets. Why is this so revolutionary? Blockchain is not just about digital money. It's a new way to structure trust on a global scale. Want an example? Smart contracts. Imagine making a financial deal without needing a lawyer to formalize or a bank to clear the payment. In the blockchain, this happens automatically because the terms of the contract are written into the code. Or think of voting systems where each vote is recorded in an immutable way, eliminating fraud. This technology goes far beyond Bitcoin. It can be used to track the supply chain, protect medical data, and even create new models of governance. In other words, blockchain is not just a tool, it is the basis for a technological and social revolution. So my friend, the choice is yours. To continue relying on the system that prints money like toilet paper, or embrace the only asset in the world with a limited and unbreakable supply. As you think, the big players are already accumulating. Remember, the market is PvP. Either you learn to play now, or you'll be the next one to be sold at the top. Want to master the game before it's too late? Follow the Kaiser and subscribe to the channel. Here, you will not hear promises of easy wealth, but will learn how to protect your money and build a winning strategy. Click now, because the market doesn't wait for anyone.